let's talk about exit criteria. When do you get paid? When is the money made in a trade? When you exit. Can you go to your phone company and say, I want to pay my bill with my $2,500 of unrealized profit on the ES? Just go get it from the market. They're going to say, all right, sir, go close your trade, take the cash and wire it to us. You only realize profit when you exit. This is why we have an emotional connection to the exit. The entry is great. Everyone can hit the button to enter. Why? Because it's excitement. It's opportunity. It's woohoo. Exit is emotional because you're taking a cut of either losses or you're cutting your gains. If you're cutting your losses, you're saying, great, now it's going to come back. If you're cutting your gains, you're saying, great, now it's going to go up. Sorry, another 5%, I'm going to miss it. We think that cutting gains is bad, but cutting losses triggers dopamine to your brain out of 3 times the extent. If you lose $1 to your brain, it feels like you lost 3 versus gaining 1, it just feels like 1. Your loss aversion, your dopamine is triggered into your brain on an animalistic quality of loss. Loss is a lot more important to you. It's like you're in a cave and there's a big animal trying to attack you. Run, or kill, or defend yourself. Versus, oh, well, there's dinner tonight. Great, I could eat. Right? That's the difference. So losses is where people lose. I know traders who I've literally sat with, I'm not going to mention names, I've literally sat with and I've said, all right, so this is what you've done. Here's your body of work. Here's your win rate, loss rate. Let's look at that. And let's see what would have happened if you followed a risk management strategy. Those days where you lost $800, what would have happened if you lost $250 if you capped that? My gosh, wow, I would have probably broke even. Or I wouldn't have lost all that money. All right, and then we took it a step further with their journal and we said, now let's look at the trades where you've identified you're emotional and where you exited not according to your strategy. You remove those trades, wow, you're profitable. Wouldn't you know it? It's not your strategy, it's how you're executing it. All right, when will you exit trades? Can you exit early on a manual exit? Or do you have to wait? What do you need to see? I'm going to share with you guys my 747 analogy. A Boeing 747 can fly on 2 engines. If it's on takeoff or landing, it probably can't. Those are the most 2 dangerous times. But while you're flying and cruising at altitude, you could probably get down with 2 engines. It also depends which 2 it is. All right? If it's 2 on one side, your rudder control is going to be insane. The pilot, hopefully he's got strong quads because he's going to have to keep the whole plane afloat with this 1 foot on the rudder on the back. All right? So depends on which 2 engines. But I'm telling you, if you lose 1 engine, fine. If you lose 2 engines, depends on where it is, maybe it's still fine. You lose a third, you're going down. All right? Take the same approach on exiting your trade. You had qualifiers. All right, here's my qualifier 1, qualifier 2, qualifier 3, qualifier 4. The 4 that you chose to get in, let's say you said correlation. Well, market correlations turned the other way. Lost an engine. Lost another engine. Which 2? How important are they? To me, if I lose a correlation engine, it's like I lose 2. All right, I lost a third. It's going down. I got to get out. That's how I make a manual exit. All right, so I exit one of 2 ways. My stop is activated. That's the most often exit. 2 is manual, where I'll lose some engines or I want to scratch a trade. All right, it's very important. Actually, Bill, you said that comment great at 747, right at the time that I used my 747 example. Very weird. I got to look up that number. It's got to mean something. All right. I want to share this thing with you here. In trading, we have something called edge. Edge is statistical probability that we're going to be right. This is where all of our analysis is. That's what we teach. We teach you how to have an edge in trading. All right. If you plot edge against time, this is where you're going to see. As time passes, if the trade's not going your way, your edge slips. All right. At the same time as your edge is slipping and you're sitting in a trade as time passes, your hope starts to increase. It's your animalistic quality saying, I can't lose. I got to do good. I got to pull through. It's a romance story of the underdog surviving, man, making it against all obstacle and struggle. That story doesn't exist in trading. You sit there, you're going to get destroyed. You're going to get your teeth kicked in if you want to sit in the boxing ring. The boxing ring, if you don't have your gloves and you're not punching, you're getting punched. All right, so as your hope goes up and edge slips, when you notice these kind of cross, ditch it. Get out of that trade. That's kind of how I manually exit. On that cross, if I could identify that psychologically, I'm out. Scratch the trade is what I call it, break even. because as your edge slips and your hope increases, you lose control. And when you lose control, you lose your account. All right, drawdowns. Let's talk about this. How much percentage of your account will you lose before you stop trading and reevaluate? Very important. Remember, we had a daily, weekly, and a monthly DWM figures. This is something different that I'm asking here. This is, let me make the pen a little bit thinner. This is a percentage of your account. All right, I got 50,000. When I lose 30% of it, I'm done. Strategy is terminated. It's like a contract. Strategy is terminated, over, out, done trading, not going live. Do I want to continue trading? Yes or no? The only way you're not going to be profitable is if you give up. If you say no, great. All right, perfect. Go do something else. You at least have 70% of the money to try another venture. If you say yes, go out there, recalibrate, and write this down before you actually lose the percentage, obviously. What are your next steps before you start trading live again? What's your exit strategy? In a relationship, all right, in business, in your job, and everywhere, there's an exit strategy for you. And if you don't know it, then you're somebody else's exit strategy. All right, so you have to identify this. When will I exit a relationship? When will I exit blah, blah, blah? Sometimes they're more harsh than others. When will you exit your trading strategy? When are you done with it? All right, write it down, spell it out. Not just a percentage, but what will you do after? How will you bounce back? How many months will you allow to pass before you start? Consider the possibility of this actually happening. You're down 30%. All right, how do I feel? What would I have to do? And if it actually happens, knock on wood, it does happen occasionally. Happens to other people, happens to some, doesn't happen to others. Then you look at this, you pull this out and say, all right, what am I doing now? Because your head's going to be spinning. You're like, I can't believe this happened. You're going to be very negative. This is going to pull you through. This is going to tell you what the next step is. You got to have this drawdown as part of your strategy. I have it. I know my number. 100%. It is. If I lose all my capital, I'm done because I have other stuff. The capital I have in my trading account, I can afford to lose.